Jamie Dimon, the big dog, woo, 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 says we are in the most dangerous period we've seen in a long time, in decades, as he said. Couldn't agree with you more, Jamie. Been trying to warn people of this for a long time now. For those of you who are unaware of who he is, maybe living under a rock, Jamie Dimon is the head honcho of the largest bank in the world, at least when you're going by the market cap. And of course, we're talking about JP Morgan. You know, that bank that serves like 60 million customers and employs over 300,000 people around the world. That Jamie Dimon is saying that we are in some serious shite, so to speak. It's not like he's some random 8-figure earning YouTuber clown that you aren't sure if you should believe or not, even if this said YouTuber has been calling the shots accurately of the economy for the last few months now. Just saying. We're talking about Jamie Dimon with a $2 billion net worth. The man has decades of experience in the banking sector, and leading a major bank like this requires constant analysis of the economy. JP Morgan would not be where they are if his analysis were often incorrect. And I mean, JP Morgan operate in numerous countries, so he has a global perspective on the economy, which is very important because we're now a global economy. Not trying to ride the man's jock, but he put in his work and he knows his and personally, I respect that. Oh, forgot to tell you, subscribe. Like, it really matters, right? Not sure why us YouTubers all tell people to subscribe, because I feel it almost has the opposite effect. When someone tells me to subscribe, I'm like, yeah, I'll show you I'm not going to subscribe, right? But come on. Just hit that sub button. Give it a little tap. Give it a little tap-tap-a-roo like old Happy Gilmore. I'm going to show you some clips of an interview that Jamie just did with the New York Times. He's very realistic. And here's what I really respect about Jamie. I respect the fact that he's saying our economy is some serious trouble, and that's not something that's going to help his company. This right here is key because most people just believe what they want to believe because it's beneficial to them. Really, they ignore the facts. This goes with all parts of life. It's like your buddy's girlfriend who's sleeping with everyone in town, and it's like everyone knows it, and your buddy's like, no, she would never do that. She's so sweet to me, and she tells me she loves me every day. Meanwhile, she's going to the library in her miniskirt and high heels to study with her friends. Then her GPS puts her at random singles guys' houses that are just friends. Comes home smelling like men's cologne, and she's like,
my friends wanted me to have some advice on how it smelled.
Doesn't answer her phone for hours at a time because she was working late at a job that ends at 6 p.m. It's like, come on, bruh. Pay attention to the facts. Stop being a sucker, and you gotta stop believing what you want to be true. Human nature is to believe what we want to be true, not the actual truth. And let's be honest, Jamie has a lot of influence. So if he came out and he said the economy outlook is looking good, a lot of people would probably believe him, and just that good sentiment alone could help his company for a while. But he didn't do that, and I respect it. I want to start with some recent clips of his interview that he did with the New York Times, where he talks about the economy. Let's check out the big dog, JD.
Now, I tell my own people at JP Morgan Chase, the economy is the weather. And people are always trying to guess what the weather's going to be. And you know what? You're making a mistake. It might snow, it might rain, it might be icy outside, it goes up, it goes down. As a company, we're prepared for all of that. My job during that kind of thing is to serve my client, which includes countries, cities, states, hospitals, schools, Ukraine, IMF, World Bank. That's my job. And I know that the weather and earnings will go up or down and credit losses and all those kind of things. But if you look at the U.S. economy, yes, almost all-time low unemployment, but inflation is hurting people.
Now, in this next part, the bottom 30% that Jamie is talking about is something he was talking about earlier in the interview. He was basically saying how we've been saying that we were going to help lower income earners for a long time, and it just hasn't really happened. Let's check this out.
Employment is really important. I just mentioned about the bottom third. Okay, and so when you say polls, that bottom third, I kind of think they have a right to be pissed off. I would probably be a little pissed off if I were them. And so we shouldn't just act like it's a binary type of thing. What did we do wrong? We've been talking about trying to help those lower income citizens now since President Johnson. And it's almost still where it was before. And so I just think we've made a lot of mistakes.
My man. I love this. My hope is that he really cares for people and he's not just running game on us. And I do get a feel that he does care for people. But he also understands how helping people is good for the economy if it's done correctly. Whole nother topic for a different day, but let's go to Jamie's specific outlook on the economy.
Let me just caution you in the economy. When people look at the current economy and things are going good, stocks are up, and we've had a little bit of drugs injected directly into our system called fiscal stimulation, the largest we've ever had in peacetime, and QE, the largest monetary stimulation. Two different things, different effects, but they are drugs running through the system, and they create this kind of sugar high, and we're in a sugar high. I don't know if it's going to end in a soft landing or something like that. But when people say, well, corporate profits are up, this is up. Yeah, corporate profits are up because people are spending a lot of money. Where do they get the money? The government gave it to them. Well, of course profits are up. When they stop spending money, corporate profits will go down. So I'm a little worried that we're in that little bit of a sugar high and we don't understand it. We've never had QT before. I think it may bite more than other people. You're going to see it in volatile markets. You've seen very volatile markets. Now, most of you don't care about volatile markets unless it starts to affect the economy, and which it might. And so I'm quite cautious about the economy, and I think that the QE, QT, and all this geopolitical stuff, they can bite. And I would just be a little careful about that just because it feels pretty good today.
I mean, that's very well explained. Let's now go to one last clip where he's talking about the interest rate.
And you think that Jay Powell may still raise rates? You don't think he's finished? The prevailing view is he's done. Yeah, well, and maybe we'll actually go the opposite way.
The prevailing view, take a chart of the prevailing view before every major inflection point, and it's always been wrong. So, I don't look at the prevailing view, and nor am I trying to guess. So my view about the economy is I think there's a higher chance than other people that rates have to go up. Think of short rates and 10-year rates. The Federal Reserve sets short rates. They simply dictate it and can manage it through a bunch of means. They do not set the 10-year rate. That is set by you. Supply, demand, inventory, sentiment, capital requirements around the world. And those capital requirements are huge. Governments have the biggest deficits ever, and they have the biggest debt ever. When we last had inflation at high numbers, the debt to GDP was 35%, and now it's 100%. And you can go around the world and it's roughly, we've been the most profligate, but it's roughly the same. And so when Volcker raised rates, the deficit was small and the debt was small, and now it's far bigger than that. Governments need more money. The green economy is going to need more money. The European energy situation requires money. The restructuring of trade is going to be inflationary. The remilitarization of the world is inflationary. So there are a lot of things out there which are both dangerous and inflationary. So I just say, be prepared. It's rational if you work on a risk me that the rates may go up, both the short rate and the 10-year rate, and be prepared that might lead to a recession. Now, when I worry about JP, again, that will hurt us a little bit. We'll still be fine, and we'll serve our clients. But I think the odds are higher than other people. I think there's still a chance of a soft landing. I just give it less odds than other people. That's all.
I mean, look, I can see why this guy is the longest running CEO of any major Wall Street bank. He's very likable, and on the surface, it seems like he's a good dude. Obviously, you never know. He could be running game. But either way, I think he's very accurate on a lot of what he's saying here. And I really love his points when he's talking about Volcker. When he was raising the rates, the deficit and debt were small. It's totally different now. Although Jamie is saying the economy is in trouble, I personally believe that Jamie actually thinks the economy is in even more trouble than he's leading on to believe, because he doesn't want to scare people. This is someone that has a lot of influence, and if he was any more adamant about how much trouble the economy was in, it could really cause a lot of panic. And Jamie is smart. He doesn't want that. So I think he's trying to warn people, but he's holding back at the same time because he doesn't want to cause a panic. Honestly, I don't blame him for that one bit. So we're in some mud here. What should I do? Personally, what I've done is I've invested more in guns, ammo, and food. And this is like the just in case for the most extreme situations that likely won't happen, but I like to be prepared just in case. Also, I've started rolling over portions of my 401k to precious metals. All signs are pointing to a stock market crash. Even JP Morgan's chart guru Jason Hunter is saying the S&P is likely going down to around the 3,500 range. Why the hell would you leave all your 401k in stocks, likely about to lose 25% or more? Rolling into precious metals is a protection plan, and instead of losing 25, 40, 50% or even more of your retirement, why wouldn't you put protection in place? In 2008 crash, people who had all their money in a traditional 401k lost almost 50% of their retirement savings. People who had just 30% in precious metals made out like a bandit. So if you take like $1 million example, Those with 100% traditional 401k went down to $510,000. Those with $1 million who had just 30% in precious metals went from $1 million to almost $1.5 million. And then those who had $1 million and went 50-50 between a traditional 401k and a precious metals IRA went from $1 million to over $2 million, more than doubling. And here's another little secret. After stocks crash, you can roll funds back in as you please. And that's my plan. I got less in stocks because the outlook isn't good, more in precious metals because their outlook is great. And I'm going to do this until stocks crash a good bit and I start rolling more into my stocks and less into precious metals when it reverses. Investing 101. The company that I personally use for gold IRA rollovers is in the description. They offer a 100% free kit to help you get educated. And if you don't want to use them, all good. I recommend that you at least do your research and find your own company though. Although the company I use is top notch, I've been in this industry for over 15 years now. Feel free to do what you want, but just make sure you get educated. And look, when it comes to the economy and life in general, stop believing what you want to be true. You have to look at the facts. That is how you're going to make the right decisions. Make sure you subscribe.